please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Our morning call.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia, and we are going to start a fresh contract. Well, not a very positive look back at the old contract. At least the new contract is beginning with fairly reasonably positive global cues. At least we've got a dollar that's lower and yields in the US markets moving down by about 3 basis points or so, and therefore a little bit of green on Wall Street. Asia is also not doing too bad, but the point is we have not been able to take advantage of those cues, which is what the February contract really showed us. One of the biggest losses in point that we have seen since probably Lehman. What is worse is we are only looking at that index. If we looked at the mid-cap index or the small-cap index, the losses are more like, 11% year to date. And individual small caps, individual mid caps, why? Some large mid caps have lost between 15 and 30%. So the initiative is at the moment not with the bulls. We will have to see if they can make a match of it in March. Morning, both of you.
Hi, good morning. Absolutely. And, so much volatility as well, right? The market recovered in the last hour of trade. So we are seeing a lot of intraday volatility too. Anuj, morning. Given that the FI sell figures continue day after day, do you get a sense that the volatility that we've been seeing the last few days could continue even in at the start of the new series?
Morning, Sonia. Morning, Lata. That could happen and should happen. But, you were not there yesterday and made this point. For me, the big story of Feb series was a confirmation of a fact that the market leadership has now changed. The Nifty IT has outperformed Bank Nifty by 7% in February, and that's a large outperformance. And not just Nifty IT, overall Ruti was down 9%, while Infosys was up about 1%. Motherson Sumi was down 15%, First Source was up 22%. Now, this could be an isolated instance, of course, but the larger picture is that a lot of money is moving from the erstwhile market leaders into new leaders, and this is the second phase of bull market. We're going through a correction, but this is no bear market. This is a bull market correction. At some point, it will get over. Will the new leaders emerge? That's something we'll find out. The good thing about Bank Nifty also is, though, it's bouncing repeatedly near the 200-day moving average. So I think on the index, the trade is very simple. For now, you want to see if the indices are respecting the recent lows. If they're respecting recent lows at those levels, you want to take a long positions and with the recent low as stop loss. Simple as that, because in that case, your risk reward is extremely favorable. Your risk is only 50, 100 points, but your reward could be 300, 400 points easily. So you just may want to try a long trade, 300, 400 points easily. So you just may want to try a long trade also because you don't have the baggage of the last series. You're starting a new series. This FISL number looks large because it was expiry week and there was a lot of arbitrage unwinding. They sold 2,300 crores in cash, but they bought 1,687 crore in stock futures. So net there was still some 600, 700 crores selling, but there was arbitrage unwinding as well. And then you're starting March series with net shorts. FIs are starting at 49% net longs. Anecdotally, in these series you don't fall too much. The only problem is that March is the last month where you have this baggage of LTCG and the implementation of that happens from 1st April. So there might be some balance selling that might happen. But my basic premise is that for the month of March, for starters at least, you don't want to go short because the market has already seen a lot of selling and it's seeing a lot of sectors do well. The better trade right now is to focus on IT stocks, couple of pharma stocks. They are doing well, and you want to try a long trade with the recent lowest stop loss. If recent low goes, of course, in that case, maybe the market corrects more. Also, you're so close to 200-day moving average, and you normally defend the first test of 200-day moving average.
You spoke about a better trade is to, be with IT stocks, but this change in leadership, you think it's something that could sustain? Because even in the stocks that you spoke about where selling pressure has come in, say Motherson, say Maruti, Eicher, there's nothing wrong with the fundamentals. So is it just a trade that's taking place?
It could be, and see, Maruti's trend reversed even, after it hit 10,000 and after good numbers also it didn't rally. Yeah. Motherson also has been an FI favorite stock. These stocks will bounce back at lower levels. All I'm saying right now is that where's the better risk reward? The better risk reward right now is perhaps in IT because, their currency is also supporting you, and you have seen even in the weaker market, these stocks have outperformed. In weak market stocks that outperform, you should be with that pack rather than, haloed stocks because if a stock has fallen 15%, it can easily fall another 10-15%.
Okay. No, I'm really wondering which way the market can move. Clearly, there are some question marks on our macros, and that is always a worry. But looks like yesterday the rupee outperformed other currencies. It fell, of course, but it outperformed the Korean won and the Malaysian ringgit. So there is a hope that perhaps the only niggling worry about the rupee is that people were wondering if the scramble for dollars over the past 1 week, because the rupee is the only currency to have fallen practically every day of the past 1 week. The scramble for dollars is probably because buyers' credit is drying up. Now, that's not a good sign. Of course, it will get over. It's only one bank that's been affected, and people will get over it. But these doubts over, I mean, there are actually people going to the extent of saying, is all well, you know, foreign traders asking, is all well with Indian PSU banks? Will they honor their LCs? These kinds of doubts are uncalled for. I mean, this is an isolated instance. But nevertheless, that's what has led to this strength in the dollar. It looks like it's playing out its last leg, because yesterday there was clear rupee outperformance compared to the Korean won and the ringgit. So maybe the memory of PNB will also be erased by and by.
Okay, well, it's the last day of the trading week. So let's find out what our wise experts have to say as we head into trade this morning. We have Sanjeev Prasad of Kotak Institutional Equities. He finds valuations of the Indian markets and stocks on the higher side in general despite the recent market correction, and he believes that the process of normalization of multiples may have just started. He says he would expect equity multiples to correct over time if the ongoing global economic recovery leads to higher inflation and bond yields. He also says India faces country-specific macro and political risks over the next few months, which may force faster normalization.
Now, I think this is very important. We have been trading higher multiples because the inflation targeting of the Reserve Bank coming at the same time as the fall in crude prices gave yields, I mean, took yields so much lower, and multiples always are, you know, moving in the opposite direction. So as yields move lower, multiples expanded considerably. But now that yields are going up, our multiples will shrink. So I think that's putting it very clearly on the table. Higher yields are a problem, and yesterday yields rose, giving no indication that that is the last. 7.8 is where the 10-year ended. And, you know, we are still looking only at the 10-year. If you looked at the CPs and the CDs, I mean, the rise in yields is like 150 basis points. So to that extent, multiples may have to come down. Okay, more opinion coming your way. Neelkan Mishra of Credit Suisse says the rupee weakness could be beneficial for companies with revenue denominated in dollars and costs in rupees, like IT companies, metals, energy and pharma, and detrimental for companies with dollar costs, like staples on unhedged dollar debt, like Bharti. Those are the victims.
Okay, well, let's also get you some money market views now this morning. Bhaskar Panda of HDFC Bank says worries of US rate hikes, consequent rally in the US yields coupled with uncertainties due to PNB episode has brought back pressure on the rupee. He says the dollar-INR pair has broken through crucial 64.80 levels and traded above 65 to the dollar yesterday. He expects the pair to consolidate in a range of 64.85 to 65.15 given the dollar fall overnight.
Okay, this is on bonds. Bhaskar Panda says the 10-year benchmark bond yield has been rallying higher after the latest MPC minutes. He expects the rate.
Okay, let's go across to Nigel then for the world view.
Well, overnight, the US markets ended more or less mixed. The Nasdaq, that's been the big underperformer. In fact, it's been on a bit of a losing streak. It's down for the 4th straight day. And in fact, this losing streak is the worst we have seen all the way since November 2016. Why was Nasdaq under pressure? We did see some selling on Netflix as well as Alphabet. Both those two stocks were under some pressure. And the bond yields, they continue to hold above that 2.9% or thereabouts, but nothing close to that 3% that we saw in the previous trading session. Fed speak, that's become rather important in the last couple of months or so. Well, we had Atlanta Fed president. What he's saying is that, in fact, things continue to look up for the US economy. But we also had St. Louis Fed president that came out with their commentary. What they said was that, in fact, too many rate hikes may slow down the economy. So mixed commentary coming out of the Federal Reserve. European markets, well, they ended mixed in yesterday's trading session. The FTSE was under some pressure. The CAC, though, managed to eke out some gains. We had some numbers that came out as well. Barclays, they reported their numbers. Well, the stock ended higher, though the numbers were a tad bit weaker. There were a couple of one-offs in those numbers as well. Asian markets, no worries. This morning, all of them have opened up with some good gains. So trading with gains. The Nikkei as well, we did have some inflation data that came in early this morning. and that was a tad bit better than what the street was working with. The SGX Nifty is indicating maybe, in fact, we'll get a bit of green just to kickstart trade.
Okay, thanks a lot for that. In fact, the US economy slowdown is something that everyone's talking about if we get too many rate hikes. The St. Louis Fed Reserve President James Bullard has warned that too many rate hikes this year could slow down the economy very soon. Listen in.
We've got core PC inflation at 1.5%. Market-based core is at 1.2%. year over year. So, we've got a ways to go on this inflation story. Inflation's been below target for a long time here. I don't think we have to be in any hurry. The idea that we have to go 100 basis points in 2018, that seems like a lot to me. That's kind of price for perfection. Everything would have to go just right. The economy would have to surprise on the upside a bunch of times during the year. I'm not sure if that's a good way to think about 2018.
I think it's important to note that Bullard is a voting member of the Fed, and he's sounding extremely dovish. He thinks inflation at 1.2. Unless everything goes well, we are not going to get a 100 basis point rate hike. That clearly has helped the dollar in the US markets, but we will have to wait and see. That's one voting member. Take a break on that note. We are coming back with TV18's top 10 list of stocks.
US markets mostly edged higher yesterday, and Asian markets this morning are also in the green, led by the Kospi, which has bounced back and is now more than 1% higher from the last trading session. Most of the other markets are also well in the green. Look at Hong Kong, it's up 400 points. Our research team is now here to give you the list of top 10 stocks to watch as we head into trade this morning. Hi guys, morning to all of you. Anuj, what are you looking at today?
So, Sonia, two stocks that I'm watching out for today. First is Aban Offshore. Crude prices are showing signs of fresh rally. Just want to see how the stock moves today because it's corrected 40% after the poor numbers. So obviously, it's not a portfolio stock, but there could be some trading rally in the stock today. And the other is Tata Elxsi. My sense is that we have started a fresh IT rally. It's a stock which is trading near 20 and 50-day moving average. Delivery buying yesterday as well in IT stocks in Tata Elxsi as well. So that could be something to watch out for.
And it's a well-regarded mid-cap IT stock. So that could be one reason why people will train their eyes on stocks like these. We've already seen the rally in stocks like Mindtree. Okay, the important news that came yesterday in terms of M&A, Federal Bank has bought a stake in Equirus. Abhishek, tell us, what does it mean for Federal?
Well, Lata, Federal Bank, as you mentioned, has taken a board approval to buy 26% stake in Equirus Capital. Now, Jefferies, which maintains a buy recommendation with a target price of 145, mentions that this acquisition augurs well for Federal Bank as they look to broaden their product offering to corporate and SME clients. So expect the stock to be in green today.
Okay, broadening of their portfolio, so that's something interesting. Let's watch how Federal Bank reacts. But let's find out how ITD Cementation's numbers were. Mixed set this time around, Anisha. And what about KSB Pumps?
Well, yes, believe it or not, the numbers are still trickling in. As you mentioned, for ITD Cementation, yes, the revenue was a tad bit of miss, down about 16% year on year. But that is something that the management has been telling us. The good news is that the operational improvement can be seen in the margin picture as well. And that's the reason we are seeing an increase in the profits. Despite an exceptional loss of around 21 crores, I expect the stock to remain in green today. As far as KSB Pumps is concerned, well, it is a similar story there as well. But with the positive news that the revenues there as well have grown in double digits, 328 crores versus 267 crores. Even if you look at the profit number, 27 crore versus 23 crores. And the good news is that the pumps margin seems to have improved considerably, coming at 14.1% versus 12.7%. That too should hold up in the green. Back to you.
Okay, Anisha, thanks a lot for that. Well, the big question that we need answer to, of course, is who owns Fortis now? Nigel, that saga continues, of course.
Well, Anuj, I wish I knew who owned it, but for the time being, at least we knew that the erstwhile promoters, their stake is down to around 3%. Remember, most of the holding was always pledged, and now, in fact, we have been seeing over the last few months that's come down from around 40% to around 3%. The key question, who owns Fortis? NSE as well has come out with an announcement. They're saying that if Fortis Healthcare doesn't declare their numbers by March 1st, then they'll cease to trade in the F&O segment at the end of the March series. What's more interesting is that Fortis Healthcare has on the BSE said that they'll be declaring their numbers on Feb 28th. So if that's the case, then I guess if they do come out with their numbers, then they'll continue trading in the F&O market. The stock should swing around as it has been doing.
You can't even say which way it will go despite all these announcements, can you? All right, Anisha, back to you. Adani Transmission has won orders, so has Dilip Buildcon.
Well, yes, we have been hearing about a lot of order wins lately, and today the good news is for Adani Transmission and Dilip Buildcon. Well, for Adani Transmission, it's not a very big order. 200 circuit kilometers is what they have back from PFC Consulting over a bottom line, over a total asset of around 12,000 circuit kilometers. But it strengthens their position in Rajasthan, and that's the good news for that particular stock. For Dilip Buildcon, this is a 150 crore order, not very big again, given the order book is around 15,000 odd crores. And this is an order for which they had been declared lowest bidder, but we might see a tad bit of positive sentiment moving the stock higher in trade today. Back to you.
Okay, well, Samir Arora was pulling our legs saying that...
I see a tad bit of positive sentiment moving the stock higher in trade today. Back to you.
Okay, well, Samir Arora was pulling our legs saying that what else do you expect these companies to do? They will get orders. What are you reporting? Anyways.
Okay, they will get orders and we will continue reporting, right? That's our job. But Abhishek, you're watching some of these microfinance companies as well. Why is that?
Well, Sonia, CRISIL came out with a report yesterday wherein they have mentioned that they have noticed some ground changes which they have highlighted in their report. The point number one being that the asset quality is improving as delinquencies are lowering. They are also seeing collection efficiencies crossing 99% mark, for the disbursement that have come post April 2017. Investor interest is also seen in microfinance companies due to the equities and debt that is being raised on the liability side of the balance sheet by these microfinance companies. So all these microfinance oriented players like Bharat Financial, Ujjivan, Equitas and Arman Financial, Satin Credit Care should be in green today.
Okay, yes, coming from CRISIL, it will be well regarded. Sonal, some more stocks in your radar?
I'll start with Corporation Bank. Not a good news coming in for the bank this time around, because CARE has downgraded the rating for various bonds to negative because they think that they have stress on asset quality and the associated cost that is impacting the performance of the bank. Going to Bank of Baroda, some good news because they're saying that they have no exposure against the LOUs that is issued by Punjab National Bank on behalf of the jewelry stocks. Sanofi India, some good results coming in from the pharma companies. The revenues are up 11%. Even the net profit, they came in higher by around 43%. Continuing with the pharma companies, Merck also came up with its results. Again, a good set of numbers. The revenues were up around 22% and the profits, they came in higher by 42%. Going to Prakash Industries, they have an EGM on 17th March to consider conversion of the to issue convertible equity warrants to promoters and some of the non-promoter investors. Last but not the least, JP Infra. There are reports that suggest that JSW Group is offering the highest bid for JP Infra and they are willing to pay as much as 9,900 crores. But again, these are only reports and we have not independently verified them.
Okay, thanks a lot for these stocks, and that's what we're going to watch out for today. Here's a quick recap. Stocks expected to gain: Aban Offshore, Tata LXI, Federal Bank, Dilip Buildcon, Adani Transmission, ITD Cementation post numbers, KSB Pumps, Bank of Baroda, Sanofi India, Merck, Prakash Industries, JP Infra, Bharat Financial, Ujjivan and Equitas. While the lone stock from our list expected to be under pressure today is Corporation Bank because of the news flow over there.
Yes, but actually we have a very important conversation to play out to you about Merck. Merck's earnings, of course, were there in the top 10, but there's more. The company plans to invest about 16 million euros in India, but a large part of its biotech and biosimilar investments are currently focused actually in China. So while they sounded bullish on India, they're clearly saying that the tomorrow of the drug industry, which is biosimilars, is better attended to in China, and that's why their investments are greater in that country. Our colleague Ekta Batra caught up with Udit Batra, member of the Merck Executive Board and CEO Life Sciences. Listen to this very interesting conversation.
It's a good opportunity to invest in China, right? In Nantong, we've invested over 90 million euros to build a state-of-the-art plant to service our customers there. In China, we have a distribution center and an assembly center that we've just put up for single-use biomanufacturing. We also have an emerging biotech grant that we give out in China because there are small biotechs that want to leverage our capabilities but also are picking up innovation. So that's China itself. So there's a lot of opportunity in China. India is similar. India is, so if you just look at the biosimilars market and the need for biologics in India, for countries with similar affordability, India is still, the penetration of biologics is still rather low, right? So there is clearly an opportunity.
South Korea and China currently becoming the go-to places when it comes to biosimilar investment. Is that how things are working right now? And where does India probably prioritize in terms of scale of investments vis-a-vis these two countries when it comes to biosimilar research or biotechnology?
So Korea is quite far ahead, right? And there are a couple of players in Korea who are supplying globally, not just biosimilars, but also innovative biologics as excess capacity. China has many different ambitions, and as I mentioned already, from a biotech perspective, there is a lot of activity. There's China for China and China for export. China for China is a big and attractive market. Right now, you take the argument to India, and India also has two segments: India for India and India for export. Right, and the biosimilars market and the biologics market will pick up depending upon the demand, depending upon how the demand picks up in both of those segments. And I believe there is a pretty significant future. The need is there. The capabilities are there, and it's now a question of just unlocking it. And so I think it's a matter of time.
Do you think that maybe there is a regulatory landscape which needs to be eased out when it comes to biosimilars in India as well?
From my latest understanding, there has been an improvement and simplification of the regulatory pathway. And this is why you see a bit more optimism for biosimilars for India. India for India, manufacturing in India for India, because the regulatory pathway has improved. And I wouldn't be able to go into the deep specifics there, but my understanding is that it has improved, and that leads to the improvement in the future projections. So I think people are working on that, and there are already steps in that direction.